In this video, see how a good trading strategy sometimes requires a bit more work to be super profitable.
Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade and the Playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community.
See how a good trading strategy can be transformed into a great one with just a little bit of work. Let's get to work on improving your trading.
This playbook setup, trap longs at all-time highs, second day play, is a trade setup that I get excited about. Living on the West Coast, I've been trying to create simple playbook setups that are high risk reward with less pre-market planning. As I'm here in Washington State, the market opens at 6:30 a.m. This playbook is inspired by working with fellow interns, one being Brian, helping me understand the edge and sector rotation, and Joe, who helped me interpret where the edge is in this trade and how to properly control risk. This day is June 24th. For the past 5 days, the tech sector has been leading with unusual strength. So after 5 days of strength like this, we'll be likely to see sector rotation, which is the movement of money invested in stocks from one industry to another, as investors and traders anticipate the next stage of an economic cycle. And these cycles usually come in 4 stages. As we see, there's a market bottom, a bull market, a market top, and then we see a bear market. I'll say the big picture. So SPY was consolidating with a range. It wasn't able to break over the 314.60 level as it acted as resistance multiple times. And this was because maybe that there was another wave of coronavirus coming in, some negative economic news, but we just weren't able to make another move higher. And then for this day, market internals, for the morning session in which this trade took place, I'd say about 80% of the ticks were negative. VIX was moving higher and ADD was moving lower. So there was a lot of bear market. All right, here's the criteria for this setup. So you want to see the stock breaking out to all-time highs. And when it's breaking into that all-time highs, you want to see it on weak or lower relative volume. This has edge because it shows that there isn't interest by the institutional buyers or the smart money. And basically, I see the smart money as investors, central banks, funds, other financial professionals. It's usually the group that's heavily moving the market up and down. Another piece of the criteria is price must break low a day on the second day. And that's where your entry is. And this has edge because longs will be trapped from the previous days, likely like the breakout traders trying to play the break into all-time highs. Another part of the criteria is you want to see selling volume into the break and after the break. This is going to have edge because institution will be liquidating their stock at all-time highs to take profits, and longs are likely to be place their stops at the previous low a day. And then the last part of the criteria is you want to see the sector agreeing with the move, along with the internals agreeing with it.
Relatively weak volume into the all-time high. Have you thought about potentially being more specific on how you're defining that?
I think a good way I could define that is on a daily chart. I take the volume from the previous, say, 2 months, and if the volume on the day that it's breaking all-time high is less than 50% of that average, then I'll consider that lower relative volume.
Okay, great. I really like,
sense?
Yep, I like you being specific there.
Okay, on the left side of the screen, we see the Shopify on the daily, and you see that high of 928. And on the right side of the screen, I highlighted it in an oval, and that's that day where Shop is breaking out to all-time highs. And then on the next day, we see a break of the day that it reached all-time high, and we see big volume coming in. Shares are getting puked out, and we see a big move lower, and that's probably that's a $20 move lower. And then we see price move back up, a failed retest, and we see it wedge up near the yesterday lows and a continuation lower. And these are both on big selling volume.
Follow-up question. Have you thought about defining the all-time high as your most interested in? Or said a better way, are you thinking about defining what a significant all-time high is? For example, something could just be making an all-time high every day for 30 straight days, slowly sort of going up, compared to, hey, a stock has a tremendously difficult time getting above a particular level and then finally does. Are you thinking about ways to differentiate between all-time highs?
Yes, I think a key point to differentiate it for this setup to find the reversal to all-time highs is the volume on the day that it's breaking out to all-time highs.
Totally understand and really like the way you're thinking about the volume, but could you be also thinking about the importance of the price? So all-time high is a reflection of price, and then you're doing an excellent job of thinking about the volume, but certainly there's going to be different layers of importance. There's going to be different breakouts to all-time highs in significance based on price, based on how hard it was to make that new all-time high, how important that resistance level may have been, or that resistance area may have been before it made that all-time high, and judging how significant, just based on price, the all-time high is. And maybe you haven't thought about that yet, and that's fine, but maybe we'll agree to give that some thought.
Yeah, that's definitely something I have to think about, but I understand that makes sense.
Okay,
Thank you for that.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Here's the trade management in the trade, in the Shopify trade. So we see that opening drive lower, just shares getting puked out, huge volume. And then we're going to move back high, right up to VWAP, and price starts to wedge. And that's why I wanted to put my first entry, risking the previous high, which was around 905, right above VWAP. And I was looking for a one minute candle to close. My reason to sell within this trade is because price got down to that 885 support, and I was seeing buyers coming in on the tape, and I really just this is a very highly priced stock, so just a couple shares can go a long ways. But I definitely, looking back at this, I should be holding a small position just in case there's another move lower. As on this day, I remember that SPY was continuing to move lower, and this was a definite catalyst of moving along with SPY. But I should be looking for a higher low to take off my last core position, or my last small position. And then here's some other recent examples within the last 20 days of the same exact setup. Here we have Apple. This is one of the first times it was breaking out to all-time highs, so we see a big gap higher. And then on the next day, on the day it was breaking out to all-time highs, it doesn't really have that volume that keep pushing it higher. So it needed that pullback to find more buyers. And we see that on the opening drive, so Apple creates a range, and then it breaks below that yesterday low and has a continued move lower throughout the day. Same thing, NVIDIA breaking out to all-time highs. We get a break right on the first candle of the day. It gets bought back up. We get a failed move higher, and then we get a break down and retest, and a continued move lower on elevated selling volume. And then here's another example, also on Apple. We get a breaking up higher into all-time highs. We get that break of previous low a day, and it fills the gap, and price reverses. I think another part of this trade, and a lot of traders use filling the gap plays, and that's why this can have some more edge in it, because it's kind of like filling the gap kind of gives traders a place to enter and a place to exit. And if you combine this strategy with filling the gap strategies, then that can add some edge to this trade.
Yeah, I really want to highlight that elevated volume. If you circle that again, I really like how you're adding that as one of the variables you're seeking to see to confirm the trade. That's terrific. And really what you're doing right there is, you have a thesis, right? Your thesis is, hey, if something on low volume puts in an all-time high and then gets below the low from the day before, then this trade is going to fill in the gap or go down or something like that. That volume that's coming in is confirming your thesis is correct. There's more people who are agreeing with you, which is always what we want to be doing in markets. We're not that concerned. We're one player in the marketplace. You're one person in the marketplace with trillions of dollars being slung around every intraday, right? So, hey, if I can get some more people on my team, if I can get some more people voting that I'm right, if I can get some more people on my side, I can build trades that's going to make my playbook stronger and my career more sustainable. Really like how you highlighted that elevated volume.
The main part of this trade I just think is really cool is it doesn't take too much pre-market planning, because all you have to do is set alerts at the previous day, low a day, and I see it as a high risk reward play.
Yeah, and Coleman, if I could just jump in again, I would judge how important that low of day was as well. I think about which lows of day are going to be more significant, and if they are putting on a little bit more risk. As you get more advanced, we'll talk about that. But I do want you thinking about right now that not every low of day, not all lows of days are created equal, not all time highs are created equal. And you understanding that and treating them differently with risk is going to be really important. For instance, let's say we had a triple top in a semiconductor stock. And let's say the semis have been really hot and really overbought. And we finally get above a triple high in one of the semis. We don't get the volume that you would expect in a breakout. We get that relatively lower volume. We get below the low of the day. The semis are rolling over. That low of the day actually is a more significant support level from that short-term period. I would suggest that's a trade you probably want to put more risk on than lots of other scenarios you and I could dream up of right now, because the failed breakout is more significant. There's going to be more people trapped, and it's going to potentially cause it to go down lower faster. So I want you to start thinking about that now, but really good so far.
Absolutely. That sounds like an A+ setup to me. Going along with what you said, that's absolutely an A+ setup. And if you bring in factors maybe of like pre-market levels, that could be another specific factor in you defining what a low a day is. So I just want to talk about, so when I see this trade, I want to take it every time, because then I want to be able to track the win rate and understand if I can get big in this trade and if it works for me. I see this as a high quality setup with edge, and if I recognize this in real time, it'll allow me to scale as a trader. Finding the easy money, I define that as just putting the checks in your favor. It's not like trying to find something that isn't there, but looking at the market from a view of finding edge. And then I'm going to build a filter and look through stocks during after hours to find what was hitting all-time highs and figuring out which trades I would want to make within this playbook strategy. And just a little quote that I like is, to do well in the stock market, you got to stop doing what got you into trouble in the past and create new and far better rules and methods to guide you into the future. And that's about it.
Who said that? Who wrote that?
I'm not sure. I found it on Twitter. Do you know?
No, I see that you've quoted Mark Douglas, though, and I have to sort of ask. I mean, you're coached by Dr. Brett Steenbarger, who's written a bunch of good books.
Oh, absolutely.
And,
Yeah.
you know, I think I've written a couple of good books too. No mention of us. I mean, here we are. You know, a little slight here for Dr. Steenbarger and myself. No.
No, yeah, that's my bad. I completely agree.
Completely kidding. All right. Anything else we should be talking about?
Obviously, like within this trade, I should be putting in tape, like seeing the breakdown on this, seeing what the tape is doing at these low day levels, and where resistance or support is found. That's one thing I think could be added.
100%. I'd say too, with the breakout. So you want to sort of be watching the tape when it broke out, see if it's heavy, see if it's having a hard time going up, and then 100% seeing what the tape is looking like before the low of day and after the low of day break is very worthwhile for you to record your screens, go back and watch that, and pick up the times when that stock is more, where the tape is giving you readings that it's more likely to continue down, giving you information it's more likely to follow through. You'll get better at that, and if you improve your tape reading skills around this idea, which is a good idea. This is a good idea, this trade. You'll be able to develop this into a discretionary trade for your playbook.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.